Hey traders, welcome back to Trade Empire. Today in this video, we will learn about candlestick patterns. As we know, candlestick patterns are the greatest confirmation to execute any trade. In this video, we will talk about the following candlestick patterns. Starting from bullish engulfing. This is the most powerful candlestick pattern, and it is formed by the candlesticks of opposite colors. Here in picture you can see, we have a small red candle that is engulfed by a big green candle. The bullish engulfing candle closed above the high of the previous candle. Let me show you a real chart example. Here we have a strong support zone, and price respected this zone multiple times. And one more time price is at its support, and we can expect it to go up. But we don't have any confirmation here. Then we see this engulfing candle here. That completely engulfed the previous red candle, so now we have a candlestick confirmation. And we can open a long trade here with full confidence. The bearish engulfing is the vice versa of bullish engulfing. In this candlestick pattern, there will be a big red candle that is engulfing a small green candle. It shows that the buyers are no more in control. And there are more sellers than buyers. In bearish engulfing, the red candle will be closed below the low of previous candle. Let's see some real chart examples. The price in a bullish trend and making a series of BOS. And suddenly a bearish engulfing candle formed there, showing that the bullish trend is now going to end and the sellers are in control. So we can open a short position here, and look what happened. But remember one thing, never execute a trade only on candlestick confirmation. Always use price action and some technical indicators to execute. And after that, you can wait for candlestick confirmation pattern to execute the trade. The next pattern is morning star. And it is the most effective candlestick pattern. It consists of 3 candles. And this middle candle can be red or green, but the first candle must be red and the third will be green. If this pattern formed on the bottom of the chart during a downtrend, then we can look for a long opportunity there by combining price action and some technical indicator. Let's find this pattern or real charts. Here we have a downtrend, and we have a support level where price taps multiple times, and we also have a morning star pattern here. That indicates a shift in the market. So we can open a long trade here. And look what happened. The next pattern is evening star, consists of 3 candles. The first candle will be green and the middle one can be red or green. And the third candle will be red. If this pattern formed at the top of the chart during an uptrend, then we can expect a reversal in price. Let's see some real chart examples. Here we have an uptrend, and price is creating break of structures to the upside. And then, at the top of this bullish wave, we have an evening star pattern. And we can expect a reversal from here. Let's see what happens. Look, price reversed from that point, and the uptrend has been ended now. So we can trigger a short position by using evening star candlestick pattern and some other technical indicators. The psychology behind this pattern is very simple. Look at the pattern. Market was in uptrend. And suddenly we have a candle that is neither going upside and neither downside. And after that, we see a big red candle that shows the strength of sellers and weakness of buyers. That's why we use this pattern to execute short trades. The next pattern is shooting star or inverted hammer. It is a single candle with a long wick and small body. If this candle formed at the top during uptrend, then it will be called as shooting star. And if it is formed at the bottom of a wave while downtrend, then it will be called an inverted hammer. Let's find it on real charts. Here we have a strong resistance level and price respected this level multiple times. And now again price is at this resistance level, and we have a shooting star candle here. But this is not enough to execute the trade. What we do is to wait for the next candle. If the next candle closes below the low of this shooting star candle, then we can execute our short trade here. The psychology behind this candle is simple. We have a long wick from upper side, indicating a selling pressure. And after that we have a big red candle. It means the sellers are now active and price can go down from here. And that's what actually happened. Here's an example of inverted hammer. Look at the chart. The price is in a downtrend. And currently it is exactly on its support level. And we also have an inverted hammer candle at the support level. But we will wait for the next candle to close above the wick of this inverted hammer candle. And the next candle has been closed above the wick of hammer candle. Now we can execute a long trade here. The next candlestick pattern is hammer or hanging man. If it is at the top of the wave during uptrend, we will call it hanging man. If it is at the bottom of the wave during downtrend, then it will be called as hammer. And the candle color does not matter, could be green or could be red. Here's an example of hammer candle. Look at the chart. Price is at its support level. And we think that price will go up from this point, but we don't have any confirmation. And then if we see a hammer candle exactly at the support level, we have a little confirmation here. But here the next candle did not close above the wick of hammer. So, we will wait for more candles to break and close above the high of hammer candle. And here we have another hammer candle at the support level. Now we have double confirmation that price will bounce back. And then a big green candle has been closed above the high of hammer candles. So, we will open a long position here. Here's an example of hanging man. The price is in an uptrend, creating break of structures to upside, and we have a hanging man candle here at the top. And we can expect that the price will now bounce back and a downtrend will start. But we will wait for the next candle to close below the wick of hanging man. But this next candle did not close below the low of hanging man. So, we will wait for another candle to close below the wick of hanging man. And here this candle has been closed below the wick, so we can open a short position here. The next candlestick pattern is doji. It can be red or green. Doji is an indecision candle. If it formed at the top and the next candle is red and closed below the low of doji, then a dump can be expected. And if it formed at the bottom of a wave and the next candle is green and closed above the high of doji, then a pump can be expected. Here's an example. The price is in an uptrend, and we have a doji candle here at the top, and we will wait for the next candle to break the low and close below the low of doji. And here we have a big red candle that is closed below the low of doji, so we will open a short trade here. Here's another example. The market was in a downtrend, and we have a doji with a long wick. And a long wick doji is more effective. And here the next candle is closed above the high of doji. So, we will open a long trade here. So traders, that's all for today. If this video was helpful to you, please give this video a like and share with your friends. And subscribe the channel for more trading videos.